Welcome to TradeTheMBI.com. This is John. This report is for the 14th, and well, looking at the ES, we can see we started off pre-market with a nice little bounce back, and this is, well, let's just slide over. Identical, we had a huge drop. All it did in this particular case coming back here was with positive extreme. Right about here, needed to get filled it in place. We didn't get oversold like we did on this previous one. So the bounce back, who knows, could be a little bit stronger than this one. By day two, it more than 50% eclipse of the previous down bar. That will be the benchmark we're looking at today. So that's kind of the key figure at that particular point. Then you know there's momentum going through there. You've still got enough shorts in here above zero to force them to cover. Short-term buyers jumping in, and the question will be, do we see a turnaround in mid-term buyers? Because that's what happened back over here to really generate the rest of that propulsion, which takes us to new highs. And in this particular case, if we did a similar setup, it would be significantly higher. And so it's just a question of, now that the talk has changed to domestic strife, then you're not going to be hearing about North Korea nonstop, which will have traders back in the action again. The NQ in pre-market already approaching past that 50% and above the green line. I think that becomes an easy marker right there to signal the change. We need to see a little more dip of that orange would be your ideal setup to really expect a significant push. The euro continue its rise, and that's going to fuel continued S&P gains. And flight safety still continuing. Now there's talk that the Fed may not be able to raise rates. It's becoming clear that that's their intention. They really want to put the damper on this. 2.6 growth is a little higher than they want. They really prefer to keep it closer to the 2 range. I think that if it got any in, they're going to get indications whether it's even approaching 3 or getting close to that. If it is, then there's a real problem for them, and they're going to want a rate hike, which would throw the market off a bit, as well as those seeking to go into bonds. Oil, again, I know there were the big inventory draws, but at the end of the day, this is really going to be the indication. If it goes against what supplies are, it's telling you that the economy is moving to the point where they see future demand increases outstripping the supply that exists, and that's really what we're looking for as a telltale sign. Gold continuing to press forward. This was kind of a no-brainer trade from back here. I mean, I've talked about it relentlessly. At this point, we were just waiting for that sell-off to complete down there, and once the turnaround came, boom. Pretty straightforward. Nothing to add to it. From a 5K standpoint, let's slide forward a little bit. We can see what's going on in this pre-market setup here. A little overbought. Might have to refill a little bit of it, but you can see we ended up with some cute little trades that took place the other day. We ended up with a decent buys configuration. Also was the A, blue, minus 21, all those things combined in there. Shot up to the new highs. I did have a question about a member who was talking about the relationship of, like falling highs or rising lows, suggesting a downturn. So here you can see rising lows. Really what you want to look for in this particular case is when you see rising lows without new highs being made, it's an indication of a stall out to where there's been a significant enough time that the Fibonacci from our adjustment here is rising. At the same time, you're not getting any new highs, means you're likely to come back to the bottom on that. Likewise, falling highs with no new lows, uptick. So you can see the inverse relationship can take place on those, and it's worth going back if you want to, and you can definitely get a chance to see it as you start to see those rises, and then or even lower highs too, while rising lows tends to trigger an even more dramatic decline. So these are features built into the nature of how we did the Fibonacci adjustment and the way the lagging sets up for the bars. It's not an indication of any retest support or anything, but it is different because what you're not getting is you're not getting a static baseline. And this tends to operate more like the algos do because they'll pick an arbitrary point where they're setup is for their new buy, and that becomes that low point that they're choosing to go off of, and that's where people using a traditional lowest low to the highest high will have a little bit of problems, because oftentimes they'll pass through like a 50% right here that drops all the way down and then comes right back up above it. Those kind of situations are just follow-throughs because too much supply or liquidity was available, and they're not going to stop. I mean, if you're short and it breaks through that resistance, you're just going to let it go back until, and you'll cover it coming back up through the other moves. And if you need to look at those again, get your 38% was the orange on the bottom side, 23% down at the magenta, going all the way to the 0. And that just works about, because the interesting part of it is it really doesn't work in the sense that a 50% is not a Fibonacci number. So I don't know what to tell you on that, but it's kind of something that's overlooked by everybody, but it's just a 50% retracing. It's really nothing to do with Fibonacci. So hate to break that reality in there, but if we're going to talk reality of facts, we might as well be in real facts. So you can see we ended up with a few decent buy levels, but every time I hit the 50%, it retraced a little bit. The retrace was a lot less in this case, supported all across this 23, which is a real Fibonacci. And at that point, we had a new buy signal, and that's what took off here, the pre-market setup. So all things being equal, I think that we're probably looking at a continuation. This should probably move above the 24.50. It needs to get really into the 24.60 range, and then we'd be right back on target for when buying the dip, because there's a lot of money left over when this whole little decay thing started that really wasn't put to work, and I think they were just waiting for an opportunity to get a little bit of pricing. I think some of the tech stuff that moved enough gave them the impetus to want to jump into that. So there you have it, long and the short of it. As always, though, trade well. Look for me on Skype chat.